Hi, I'm Tom Elliott, Director of Beulah Capital. This is my stock market update for August 2013. Okay, we've just been through yet another reporting season. It's a terrible time for analysts, but a good time for investors to find out where their portfolios really are. Overall earnings growth was fairly flat. The non-resources sector, particularly the banks and led by Commonwealth Bank, did particularly well, but however resources stocks are not so good from an earnings perspective because of lower commodity prices. What's interesting is that even though top line earnings growth and sales growth is hard to come by, dividend growth has been strong. And this is because resource stocks like Woodside, for example, have decided that paying out fully franked dividends is actually preferable to reinvesting in their own businesses. Australian investors at the moment, in the era of very low interest rates, want good dividend yields, in a sense more than they want capital growth, and companies are responding by maintaining or even lifting their dividends even while their earnings are fairly static. Coca-Cola Amatil is a stock that we've reduced recently. It had rallied well from our original buying position. We became a bit nervous about the company's Indonesian business. Also, there is talk of discounting wars with the two supermarkets, Coles and Woolworths. As a result, we have reduced Coca-Cola, and we noted that post our reduction, Coca-Cola's earnings result was worse than expected. Orica we've also reduced from 4% to 2%. We are very worried about this ongoing weakness in the mining services sector. Even though the big resource companies have seen fairly stable share prices, as I mentioned before, they're focusing more on now paying out dividends rather than doing new exploration and opening up new mines. This is not good for all sorts of mining services companies. Orica is one of the two that we hold, the other one being Worley Parsons, and as a result we've decided to lower the weighting of Orica in our portfolios. QBE Insurance we've also decided to increase from 3% to 2%. A year or so ago, QBE went through a near-death experience. It has rallied substantially off its lows since then, and we decided to take some profits. We probably think fairly soon that Insurance Australia Group looks a better bet. It has not rallied anything like the amount QBE has over the same time, and of course QBE does have that overseas exposure, which at times can be good, but at other times can be very, very bad depending on what period of the company you're looking at. Santos is another stock we've reduced by about a third in our portfolios. Again, the stock had rallied a great deal based on expectations. The price of oil, however, isn't doing very much, nor is the price of gas. And we're a little bit worried about Santos's capex commitments up in Gladstone with its CSG to LNG or LPG project in that part of the world, that it's a very expensive place to be building such a massive project. We've increased Brambles in our portfolio. Brambles has decided to demerge its so-called information management solutions business. Essentially this was document storage. We think that's going to be good for the stock, and essentially it'll mean that the low performing part of the business will be separated from the high performing part. These sorts of demergers are generally good for shareholders, so we hope to see some further upside in the Brambles share price. Finally, we've recently added Toll Holdings to our portfolio. The stock is underpinned by a solid 5.2% fully franked dividend yield. As I mentioned before, Australian investors love dividends at the moment, and why shouldn't they? Weakness in the Australian dollar certainly helps Toll Holdings, and for all your Essendon supporters out there, don't worry too much about Paul Little. He's one of the toughest businessmen as they come, and he will not be taking his eye off the ball as a board member of Toll Holdings. Thanks very much. I'm Tom Elliott, Director of Beulah Capital, for another share market update for the month of August 2013.